and gentlemen, and this is another episode. The title of this episode is How to Create a Financial Safety Net for Your Future. And I'm going to straight away share my PowerPoint presentation, and hopefully we can start straight away. So, this presentation is all about, I'm very passionate and excited to talk about finances all the time. And the very first session when I started this show, I spoke on credit card. And there I'm saying I think credit card can be used as an asset. So I've built up over time since I started, and week in, week out, I speak on financial literacy, on savings, and on investment. I'm very passionate about to speak on personal finance. So the topic of today is how to create a financial safety net for your future. As you come live, hang on guys, please hit the subscribe button so we could get this as far as possible, and hit your comment, say what you think. It's all about adding value, and it's all about improving on what we do. So as I've mentioned, the topic in front of you is how to create a financial safety net for your future. Straight away, let me dive into the conversation, and it's going to follow an agenda. In less than 30 minutes, I intend to finish this topic, this conversation today. So we are going to follow a strict and a chronological order in terms of the presentation today. I'm going to introduce the topic, introduce what is all about saving for the future. I'm going to dive straight away on the reasons why people should save. I'll move on to the reasons why people don't save. Straight away, I'll go on to the crux of the matter, which is how to save. The budget, I'm going to concentrate more on the budget. Furthermore, I will conclude. And then before my conclusion, I've brought 2 extra slides just to explain certain things, which is a bit out, but into the subject. And you are going to find out what I mean. And then there'll be question and answer. Obviously, this was a presentation, and you can ask your questions on the comment section, or I've shared this link on my Facebook page, my Facebook account, and also on the WhatsApp, so you could leave your comment. So, in terms of this topic, introduction, let me give you some statistics. Let me just give you some statistics in terms of savings and how the countries around the world save. If you look on this graph, on your left is a saving statistics for the UK, and on your right is saving statistics for the US. Let's concentrate now on the UK. The graph on the left basically is saying that the average gross savings on a UK household is averaging 4.9% based on their gross disposable income as of 2017, and the source is from Office for National Statistics. I looked at the most recent statistics I didn't get, but it's more or less the same. So it is very, very small. If you look at what we save, the average household saves in terms of getting where they want to get to financially, that's too small. That's just what the graph on the left is saying. While the graph on the right is also saying the same thing. And this one is a statistics from the US. The source is from the Bureau of Economic Analysis. And it's saying the average statistics of the personal disposable income savings in the US was also averaging 5%. If you look between 2005 and 2010, averaging 5%, but there was a spike in 2020 in April. And that spike was as a result of lockdown, whereby people stayed at home and they could not travel, doing what they do in terms of hobby, in terms of spending money. So 33%. And I followed a podcast on Financial Times. The podcast was all about a couple that they've managed to save up to $40,000 since the lockdown started, and now they are thinking to purchase their first residential property, or they still want to travel around the world. They have this dilemma. So you can see how some people have really used this lockdown to their advantage. Moving straight on that, in terms of, with that in mind, with that statistics in mind, it means we are not saving enough. You and I are not saving enough. The whole idea is we want to save. That's why governments around the world, they've come up with legislation. In South Africa, you have what we call the tax-free investment account. In the UK, you have what we call the individual savings account. Also in the US and Canada, you have some form of tax-free investments or savings where the government is encouraging people to save. To me, to my understanding, that is what the government around these countries, they are doing. And it's all about having that savings mindset. Because I've always said it is a skill. To save, it's a skill. You need to learn it, you need to maintain it, and you need to improve on it. This conversation as well is a reminder, because over the years, what we've done, if you earn money, irrespective of what you do, or transfer payment, or you have an inflow of cash coming into your account or your bank account, wherever, then you involve yourself in some sort of budgeting, savings, which is all about the topic. Straight away, I'm going to dive into why people should save. Why people should save, which is a very, very important topic. Why people should save is very, very important, because it is broadly the same. Why people should save around the world, it is broadly the same. But what you are going to realize as I move on is there are different reasons why people don't save, and I'm coming to that. The very first reason why people should save is, obviously, we know of, before we even go to emergency fund, we know of the primary motive of keeping saving money, economics 101. The very first reasons why we keep money aside, which is economics 101, is for transaction, precaution, and speculation. That is the first reason why people save. Economics 101, Form 3. With that in mind, you need to save to have an emergency fund. Do you have a target? I'm just going to stand here a bit, or I'm going to pause here to explain an emergency fund. I had a session 2-3 weeks ago on emergency fund, where I said there are about 5 different ways you could have an emergency fund. And I have said you could use your credit card as an emergency fund, but please don't take this as an advice. Don't. In fact, seek independent financial advice. You could potentially, let me just go straight away into the about 4 or 5 types of emergency fund. You could use your credit card. Personally, I think you need to have 3 to 6 months of your monthly expenditure. That's another way you could use as an emergency fund to save. You could have your relatives. They can either borrow you money or they lend money to you when you are in need, or I've seen relationships where people give money for free. You could also have a term deposit account. But again, is that an emergency fund? So you need a target. That's why you should save. Other people save for their children's education. Even yourself, in the UK, in the US, even in South Africa nowadays, education is very expensive. Very, very expensive. So can you afford? Can you afford? So that's why you should save for your children's education, for your grandchildren's education, etc. It's another reason why people should save. Some people save for saving's sake, and you're going to realize that because they save for saving's sake, they use it on all sorts of things, in terms of buying of cars, which you see there's a picture of cars. First of all, a car is not even an asset, and you should not be saving to buy a car, because that's a conversation for another day. A car is a liability. As soon as you get it out of a dealer shop, the value of that car drops instantly. So it's not good to save for saving's sake, because what we've said over the years is, if you are just saving for saving's sake, what you end up doing is, with the slightest challenge that you have, you tend to access that saving. So you should not be saving for saving's sake. It is not proper. So people save. You and I, one of our biggest assets that we are going to have in our lifetime is to purchase a property. That is a good one. I assist my clients averagely every day to do this, to save for a deposit towards their residential property. Not everybody is opportune to receive inheritances, or not everybody can purchase a home for cash or their first residential property. So you need to save for that. Others save for wedding, which is very important. An average cost of a wedding in the UK should be in the north of maybe between £5,000 and £20,000. So you need to save to benefit in the foreseeable future. Others plan for retirement. It's very important. We think when we are 20 years or 30 years old, we are still very young. No. If you look at the compound effect, compounding of you starting early enough, it is enormous. You cannot just underestimate it. It is enormous if you look at the effect of you starting early. So you need to start preparing for your retirement early enough. And I think personally that retirement savings, pension in terms of the legislation, what the governments around the world have done is the best. It is tax incentivized, and you save. If you start saving early, you benefit over the long term. Some people save for business expansion. I've assisted a lot of people in recent times. I know in this COVID-19 era, people are needing more money, not savings. But before, about 1 year ago, a lot of people used to save for business expansion. By the way, there's a conversation we are going to have in the future where you don't need money to start a business. You need money to expand. You don't need money to start a business. You need money to expand. Because to start a business is just something easy. It has to be in it. You need to think. So those are some of the reasons why people should save. Let's go straight away and see why people don't save, the reasons why people don't save. Cut across the board, from Cameroon to South Africa to the UK, US, Canada, people don't save based on different factors. Some people, they don't save because they don't even understand that saving is important. Some people is as a result of lack of affordability. Some people is as a result of lack of financial education. Some people, it's as a result of you not even knowing. But I just summarize the 5 below points why people don't save, just so you see. And please drop your comments if you are on YouTube, if you're on my Facebook page, or on WhatsApp, or on my Facebook account. Ask your questions there. I need to understand why people don't save. And as I've mentioned, these sessions will be coming once in a while on my YouTube channel directly, but I will still concentrate on the Facebook and the Instagram in terms of live shows. So some of the reasons why people don't save that I brought, it is not really, the list is not exhausted. People don't save as a result of ultra low interest rate environment. Now, the interest rate in the UK is about 0.1%, in the US is 0%, in the Eurozone is about minus. So do you think you want to be saving your money without getting anything? So people tend not to save as a result of the ultra low interest rate environment. That's the first reason. And there's going to be negative interest rate. I think there's going to be negative interest rate in most economies. It is going to hit the UK. There's no way. That's my personal opinion. So interest rates very low. Bank charges in countries such as South Africa, people are not even financially literate. They struggle with their finances. They end up spending more than their income. And bank charges in terms of overdraft charges is more expensive than the average return that they get. So they tend not to save. They are not motivated to save as a result of that. Another reasons why some people, they don't save is because of they want to live for today and forget about tomorrow. We are going to stand on that a bit. We are going to stand on that a bit in terms of another reasons why people don't save. We are going to stand a bit on that. So the reason why people don't save is they live for today. People live for today. That's why they don't save. They don't save. Look at that instant gratification. Instant gratification. That's why people they don't save. And we need to be mindful of that. I'm going to pause here a bit because you need to have a disciplined mindset. You need to be disciplined. You need to really be disciplined in order to be able to save. Instant gratification, delayed gratification. We know of the research of the marshmallows, whereby if you keep your one of your item today, there's a propensity that you could get more. Postponed gratification. The iPhone 12 that is coming out, the designers dresses, that all of them they are coming out. But I'm going to touch on that later. You don't concentrate on designers. You don't. Personally, okay, I'll talk about this when I'll be talking on the budget. The availability of loan. There is cheap money everywhere. There is cheap money everywhere. That's why people don't save. Cheap money, the availability of loan. So as a result of the availability of loan, people don't save. People, for example, like right now in the UK, the government is backing loans. The government, those who borrowed money 1 year ago, they've not paid. And even before now, what is the motivation if you know you can easily get money all the time? Another reason, inflation, official inflation rate versus personal inflation rate. Inflation is just simply the rising cost of goods and services. So like the price of a bread in whichever country you are, the price of a bread yesterday, a loaf of bread, how much is it today? So the official interest rate, wages don't go up, and people are stressing as a result of that. So your inflation, which is a rising cost of goods and services, is going up more than the official, your own official personal inflation rate. How is that? It means that it is really discouraging. Now I have given you an introduction of the whole of this topic. I have also explained why people should save. And this is now, I just also explain the reasons why people don't save. With that in mind, let's see how you can therefore save, which is the crux of this conversation, the budget. And I'm going to really pause here for a long time because it's the crux of the whole conversation. And after this, we will be done in this conversation. So please keep on asking your question. And if you're on the different, my apologies for especially on Facebook and the account and everywhere, but this will be done once a week or once a month. And I'll make more announcement on this one. So let's talk on the budget. I did a simple budget spreadsheet. Okay. Now it is very simple. I've not added a lot of things here. I did this session about 3-4 weeks ago in terms of budget, and I was writing on a board. Look at this. Think of the items that are not here. Feel free to add or remove, and feel free to drop your comment, please. The budget. Most of us, salary, have actually highlighted salary because we earn an income, wages, salary, transfer payment. I'll give you a tip here. One of the things people always want to do is to increase their income in order to save, but you could as well reduce your expenditure. So I've made mention of side hustle several times. If you need to increase your income, as long as you are working legally and ethically, you should be increasing your income. You have to hustle around every other thing. If your partner has a salary or you're receiving public assistance or some food stamps, others. A salary is a salary. Now, the very next item or the first item under your expenses is rent. Most of you, some of us, we still stay with our parents, make use of that. And a question was asked when I did this presentation. A question was asked that which one is better, to probably purchase a property or to rent? I said purchase a property any day. And I'll explain further. Because if you purchase your property, especially on a repayment mortgage, you are saving indirectly. But if you are paying rent, that money is gone. Take a simple example of $1,000 of rent every month for 5 years. That's $60,000 gone. But if you are paying your own mortgage, you would be saving, even if it's 15%, you're building equity. So if you still stay with your parents, make use of it. Electricity, not all of us pay electricity. So you could be reducing on that expenditure, water, gas, telephone. I personally say, I know some people are waiting now to upgrade from iPhone 11 to iPhone 12, which is good. But again, if you want to save, you cannot be going after each product that is being launched in the world. And let me go to savings that I've highlighted. To save, save, and save. For you to be able to save, your saving or your savings need to be an item of expenditure. You don't need to save after you've spent. You don't need to. And I've not even the budget, according to David Ramsey, who is an American, David Ramsey is an American debt counselor. He said a budget is a means of telling your money where you want it to go, rather than your money just disappearing without knowing where it is going. That is how important the budget is. It's a wonderful tool. There are various online tools nowadays, such as Monzo, such as a lot of them, rounding up your pence and your cents into £1, but it's all about budgeting. And if I even forgot an item that is not on this budget, on this personal budget spreadsheet, which is your credit card balance. Your credit card balance has to be an expenditure item. Your credit card balance, it has to be an expenditure item. It's not even here. And according to Sarah Williams, she is also known as AKA a debt camel. She said something like a credit card needs to be called a debt card. And I agree with her. That's what she has said, that a credit card needs to be called a debt card. And I absolutely agree with her, because when you say credit card, you are thinking it's yours. So if you have to call it a credit card, then if you really have to call it a credit card, then you have to be able to look at it as an asset. You have to be able to look at it as an asset if you have to call it a credit card. Otherwise, call it a debt card. No impulse buying, postponed gratification. You have to be disciplined. Your savings have to be part of your expense. All those things. And by the end of the day, you need to be able to save. Now you've saved. What do you do? The next 2 slides, in under 5-10 minutes, this presentation will be done. Now you've saved. You have some disposable income. You've done well. You've disciplined yourself. You know where you want to go. You've not bought things without planning. And I always say, I've got boots in my house. I've got items that I save for over 5 to 10 years. And personally, for me to buy an item, if I don't have 5 times the amount of that money as a savings, I don't buy it. I'd rather invest it. And let's just assume that I've done this exercise again and again, that an iPhone 12 is going to cost you $1,000. I say if you're not using that $1,000 or that iPhone 12 for 5 years or 10 years, personally, I will not buy it. So let's just do this simple exercise, because I could pause here for the rest of this presentation. It's the whole crux of it. The next 2 slides, I'm just going to brush it. Say an iPhone 12 is going to cost us $1,000 divided by 3650. So I'm assuming that you are going to use it for 10 years. So it's costing you about 27 cents a day. That's good enough. So if you plan to use it for 5 years, it's costing you about 54 cents a day. That's very good. Otherwise, you are not saving. Otherwise, it will be difficult. You are not going to have control. The presentation that I did on Saturday evening, on Thursday, I started by saying you need control. In a world that is plagued by current pandemic, you need control. And what better way to have that control if you are not saving? You need to. And the question was asked as well that in such economic environment, can one still save? Especially given the average 5% savings from disposable income from an average house. So I say, yes, you could still save. Think about it. If you currently stay in a 5-bedroom property, you could downgrade and go to a 3-bedroom. If you stay in a 3-bedroom, you could downgrade and go to a 1-bedroom. If you stay in a 1-bedroom, you can start sharing because you need to save. You've got to do what you've got to do. So the next two slides is you've saved, you've got substantial amount of money, and now you want to increase it exponentially. This is where compounding comes in, because if you keep that money in your cash account, it will never, ever heal to anything. So you have to be able to invest it in anything for it to outpace or outperform inflation, because remember, inflation is taking away the purchasing power of your money. So hence the next two slides, but the presentation is already done. So there are various asset classes, but I've just decided to bring the traditional asset classes. And again, this is no financial advice. This is just for information and education purposes. Don't act on this. Equity, they've historically outperformed inflation over time in terms of their returns. That's what equity have done. Property, obviously, even if it's direct property or companies that deal in properties listed on a different stock exchange, yes, but it's very risky as well. You could think of bonds. Practically, bonds now is cash. We call it income. Bonds and cash, we call it income asset class. You could also think of multi-asset funds, whereby if you have an average Apple share or Amazon is more than $2,000, do you really actually have $2,000 to buy a share? This is where a multi-asset fund manager comes in and they can manage it on your behalf in order to get the compound effect, which according to Albert Einstein, he said compound interest is the 8th wonder of the world, because you earn money, you earn return or interest or profits on money that you saved and on money that you saved, and so on and so forth. You can decide to do alternatives. And in terms of alternatives, it's a lot. Bitcoins, Forex, options, swaps. But again, you need to really be skillful. I just brought this so you have an idea of what is happening. The next slide will be on some of the terms. I've already mentioned some of them. I've not mentioned some of them, but let's just go through them and let's see what we've got. Again, I know you might potentially be watching you're on YouTube, but drop your comments subsequently. And hey, do not forget to subscribe. Hit the subscribe button. If you're on Facebook or if you're wherever, just leave your comment there later and your question. I want to know your feedback. I want to know your thoughts. How do you do it in terms of savings? How do you do it in terms of wanting to get that financial freedom in the foreseeable future? Savings, I've said, is a part of your expense. It's a part of your expense, that's savings. You cannot spend everything, then you save later on. Now you need to retain control. For you to have any control, you need to start by saving. The budget is one of the most important tools. I've said what David Ramsey is saying, that you need the budget to be able to understand where your money is going to. Otherwise, your money will disappear without you knowing. You have to delay your gratification. Are you disciplined? Are you disciplined? Do you concentrate on your needs instead of Do you concentrate on your wants instead of concentrating on your needs? And I have this, the wealth or millionaire. I've always said that the people you look up to financially, that are financially viable, you spend more than them. If you take an average person who is financially well-to-do and they earn, say, 100,000 pounds, and they are in a shop, they buy a bottle of drink for 5,000 pounds or dollars. You earn 20,000. You see, because we are in a world where we do what we do, you spend 5,000 pounds as well or dollars for a bottle, and you only earn $20,000 or pounds in terms of your net wages or salary. You've just spent 25% of your annual income. They've only spent 5%. And do your own research. Come and let's talk. You always need to have a target amount when you save. You need to have a target amount when you save. And I've already mentioned how for you to buy any expensive item, to me, I'm taking example of all the designers. What else can I even take an example of? If an item, the cost of that item is £1,000, you need to be able to divide that money by the number of days you want to use it, or you need to save and save and save. And personally, for me to spend $1,000 on something, I really need to have $5,000 net savings, or I need to invest that $1,000 and then I'll use the profit and then think of compound return or compound interest. Let me just conclude the session in terms of the presentation, and the conclusion will be some of the things I've said already, and hopefully I will see you once a month. Depends on what I do on a daily basis and what I have in store. I've mentioned about the spending habits already of the wealthy in the previous slides. You need to have control. And to have that control, you need to be able to have some real savings. Do you have it? And also, savings depend on affordability. It depends on your personal and financial circumstances. I am saying this one, please, if there is one thing you can take away entirely from this session, if there is one thing you have to take away from this session, please, is that if you earn something, please, if you earn something, you have to save something. If you earn something, you have to save something. And now let me pause again here. I've seen people who earn £5,000, they still think it's not enough. People who earn £500, they still think it's not enough. People who earn £50,000, they still think it's not enough. So hence why I have concluded that even if you earn £50, you can still save, because you can really live within that means, unless in extreme circumstances. And I understand there are people out there that they are really struggling on something. This presentation is all about if you are earning something. It's a targeted presentation. If you're not earning anything, that's another conversation. Drop me a line, drop me a comment. And once again, the disclaimer here is that this is no financial advice. Seek independent financial advice if you need to forge ahead. And if you are using this information, you're using it on your own, at your own risk. Thank you. Thank you very much. My name, I am Neville Rambo. I work as a financial planner. I've been within this space for over 10 years. I'm a mentor, I'm a coach. I like personal growth as well. Please, I am really passionate and excited. I want to hear your thoughts and your feedback on this very first live YouTube presentation. And this, I'm hoping to continue to bring you such presentation or such topics once every week. But until then, I look forward to your comments. I look forward to the next session. All the very best. Bye-bye.